Good afternoon. Welcome, everyone. Thank you so much for attending this webinar on navigating the AI landscape. We are very excited to be putting on the webinar together with Boosted AI, given the launch of our new artificial intelligence fund. My name is Caitlin Thompson. I'm the VP of Product Strategy here at Evolve. I'm going to be doing the presentation on Evolve's behalf. Unfortunately, the slide says Raj Lala. I'm obviously not Raj Lala. Hopefully maybe a better looking version that you're stuck with for the next 45 minutes. But I'm very excited to introduce our guest speaker that is joining us, Joshua Pantoni, who is the CEO and co-founder at Boosted AI. In terms of the agenda, as I mentioned, we're going to try and keep the presentation to about 45 minutes. So if we can jump to the next slide quickly. I think I'm going to, yes, perfect. I will do a quick intro to Evolve ETFs. Then I will pass it over to Josh so he can talk about Boosted AI. He's honestly going to do the bulk of the heavy lifting for this presentation. I think his part is the big draw. He's going to define artificial intelligence, get into kind of the impact of AI on the world. And then he's also going to talk about how Boosted's platform is helping financial advisors in lots of different ways. He will then pass it back over to me, and I will talk about the artificial intelligence fund we just launched. And then we're going to try and leave 5 to 10 minutes for Q&A as well. Perfect. Okay, so in terms of Evolve ETFs, some of you may have heard of us, and some of you, this might be newer information. But we're an ETF firm about 6 years old. We're currently managing over $7 billion in AUM, which makes us the fastest, if not one of the fastest growing ETF providers in Canada. We currently have 28 ETFs on our shelf. I like to think about our platform in kind of 4/3 buckets. The first one is the cash solutions and fixed income bucket. It is our largest bucket. It contains very popular funds like our high interest savings account funds, HISA and HISU. We have some newer, recently launched money market funds, MCAD and MUSD. A couple funds that people maybe are less aware of is we have partnered with some world-class sub-advisors to manage some actively managed fixed income funds for us. So EARN is a global fixed income fund managed by Allianz Global Investors, who is the sister company to PIMCO. We also have Addenda, which is a large institutional manager in Canada, running Canadian core fixed income for us, which is fixed, and Canadian preferred shares for us, which is DIVS. The second big category, and the category that's seen a lot of growth over the last year and a half for us, is our covered call or equity income lineup of products. We're currently managing almost $1 billion in covered call funds. Our big value add with these funds is our actively managed covered call strategy, which really we think sets us apart relative to competitors. In terms of the types of funds we have in that bucket, we've got some broad ETFs. So as an example, ESPX is the S&P 500 with covered calls. ETSX is the TSX 60 with covered calls. We also have a more newer launched product bond, which is fixed income with covered calls. It's definitely a newer category to the Canadian ETF landscape, and we're proud to be one of the first people to launch a product in the space. And then we also have a number of sector-specific covered call funds. If you're someone that enjoys making sector bets, I won't name them all, but a couple of our most popular ones are Bank, which is Canadian financials, Life, which is global healthcare, QQQY is a newer one, but it's technology focused with covered calls. The final two buckets kind of go together, and I think it ties in well to this webinar. Evolve really built a name for ourselves in the early days as leaders in disruptive technology investing. We launched a lot of firsts of their kind. So as an example, we launched the world's first automotive innovation ETF, which is CARS, Canada's first cybersecurity ETF, Edge is Canada's first global innovation ETF. We also launched some of the world's first Bitcoin and Ethereum ETFs in kind of our cryptocurrency category. And more recently, looking at more broad tech, we launched a fund QQQT, which is the NASDAQ 100, but only the technology companies in the NASDAQ 100. So all this to say, we are known, and investors and advisors think of us for disruptive technology investing. Launching an artificial intelligence fund has been something that's been on our radar for years, but it wasn't until actually partnering with Boosted and getting to know their technology and their platform that we felt we could create an index of kind of true pure play AI exposure. So with that, I will pass it over to Josh to intro Boosted and go over some of the key slides that he has to speak about.
Boosted AI is a generative AI platform for professional investment managers. We power over 200 of some of the biggest asset managers in the world. Our clients use us for trying to monitor holdings, trying to go through, speed up, and sort of enhance the research process, for trying to think about risk in ways that are non-standard. The ways I like to think about it is we can kind of search through tens of millions of documents, analyze them in ways that are really hard for a human to do, but then from those millions of documents, kind of scale up, here's the most important thing relative to the piece of work that you're trying to do. And I'm going to talk a lot about sort of what's possible now versus what was possible before, and where I think the space as a whole is interesting. But I thought it'd be kind of interesting to just take a step back and sort of talk about AI on its own. So I've been operating in the space since about 2008, 2009. And when I started my first company, AI was kind of a bad word. It's hard to believe that now. But at the time, people have been thinking about AI as a technology since the 60s, and it was only really at the beginning of trying to see this stuff bloom a little bit. In my mind, I really think AI started to develop and become an everyday occurrence kind of at about 2012 with the sort of announcement of Siri. That's when we started to really think about these things. And since then, it's really become ubiquitous across most facets of life. If you are using a search engine, that is powered by AI. If you are getting served ads, that's getting powered by AI. If you use YouTube, the kind of things that you get from YouTube is also powered by AI. So AI has been a sort of increasing area, an increasingly important area of the economy. But there's been this kind of inflection point in the past few years where it's gone from being this thing that was kind of behind the scenes and powering a lot of key technology behind the scenes to a piece of technology that you can now really interact with in quite a visceral way. So just kind of taking a step back, AI is basically any kind of system that is capable of doing some sort of vague human level intelligent task. And then machine learning for me has really been anything where you can start to apply statistical techniques, where you're starting to learn from data. And to sort of put this into concept, when I first got started back in 2009, we were learning from like tens of thousands of examples to hundreds of thousands of examples. Deep learning is a sort of set of machine learning that is trying to sort of replicate a little bit how the human brain works. It's got neurons, perceptrons, it's got all these different things that are kind of communicating with each other. That let you scale up the amount of data you could learn from in the range of tens of thousands, the range of millions of data points. And where generative AI gets really interesting is a lot of these things tend to usually be on the back of a particular type of deep learning called attention networks. And these things can learn from trillions of data points. Some of the big models that we're aware of what the data level, where they've been sort of public about the data, are trained in the range of 11 trillion tokens, which are basically words. So we've gone from an era in 2009 where we're training on hundreds of thousands of examples to an era today where we're training on tens of trillions of examples. And what's I think really interesting about this is there's been a bunch of emergent properties that were quite unexpected if you were to jump back in time in 2009. One of my favorite examples is, if you ask a human, she tried to put the painting into a purse. You as a human really quick, and it was too big. You as a human really quickly can figure out that it was too big refers to the painting. And if you said it was too small, you as a human can really quickly figure out that you're probably referring to the purse. In 2009, we didn't think it was going to be possible for machines to be able to handle something like that. In order to do it, you need to kind of understand this mapping of, well, it could refer to the painting or it could refer to the purse. And you needed to be able to understand sort of this geospatial element of, well, I'm trying to fit an object into another object, and the size, determines if I'm trying to fit the object into something or if I'm talking about the object that another thing is trying to get fit into. And so it's really easy for a human to understand. I tried to fit the painting into the purse that was too big, but that was almost impossible for machines to figure out. And I think really interestingly, those kinds of challenges, those kind of grade 7 or grade 8 level of reasoning, have just seemed to sort of organically develop as we train these models with truly monstrous amounts of data. And that, I think, is starting to create this renaissance where all of a sudden there's all these tasks that we didn't think were going to be automatable, or that were really going to be affected, in my lifetime, to a world where this could potentially be raising GDP annually by 7% over the next few years. And that's a pretty incredible inflection point. And so that said, let's talk a little bit about what language models are. Large language models, and when I talk about large language models here, we're really talking about generative AI, what people are usually referring to as generative AI, but also I think it's really important to kind of understand what they're not. So, at a high level, basically what's sort of happened, where the current state of the technology is, or at least where Boosted would say the current state of this technology is we have these sort of savants that can access almost all of human knowledge. But are, only at about a grade 7 or grade 8 level of reasoning. And so you can access all of human knowledge, but if you try to do, things as basic as mathematical equations, or if you try to do something that involves a whole bunch of sub-steps, or if you try to go to, first-year university mathematics, you can really quickly kind of find the edges on what these things are capable of. If on the flip side, you want it to summarize a few hundred pages of text into something succinct and easy to understand, it's able to do that quite easily. So in a world where you can kind of break the task into a bunch of small tasks and then just scale up the amount of time that you're spending on those tasks, these machines can be extraordinarily powerful. And I think kind of where the sort of edge of this technology is right now is a lot of us are then trying to take these capabilities. We're trying to find workflows that can be broken down like an assembly line to a series of grade 7, grade 8, grade 9 level tasks, but then just scale that up where you're doing tens of millions of examples of reasoning on tens of millions of pieces of text. And so just at a high level, it turns out that actually covers a pretty large portion of the economy. Any time where you're trying to read through a whole bunch of text and get the key insights, this can have a big impact. Anytime where you're trying to write some kind of report, this can have a big impact. Anytime you're even some things like creative work, generating images, generating songs. I think the really interesting thing is when it sort of tries to fill in the blanks at the edges of its knowledge, it can start to create these interesting artifacts that actually let it be a little bit creative in how it can think about things. So we think this is going to drive pretty massive adoption across the economy. In the short term, there is going to be a lot of big impact on companies that provide infrastructure. So obviously like the NVIDIAs, the Googles of the world, the Google Clouds, Amazon Clouds, those kind of groups, companies that have key data in the space that are actually used for training these kinds of models. But I actually think in the medium term, there is an opportunity both for early adopters who are starting to use this to see some really quick acceleration. And then there are some other areas in robotics where I think you'll probably see sometime in the next 5 years an OpenAI of robotics, where people are starting to take these large language models and integrate them into robots that can actually do really basic tasks, like pick up a bunch of toys that are all dinosaurs, as an example. It's not hard to go from that kind of thing to start to think about sort of basic labor. So it's already having a really big impact. We saw a lot of experimentation last year. We're starting to see a lot of implementation of that experiment as we go into this year. And that's just going to continue to accelerate both the amount of growth you're seeing directly in the sector and the kind of knock-on effects that you're seeing across the entire economy. And this actually kind of leads me really well to the core thesis behind why we think generative AI and AI overall is so important in finance. One of the challenges with generative AI is that it's going to impact a broad range of the economy, huge range of the economy. And it can be really hard to find all the opportunities of things that are going to be positively affected. And if I was to kind of like quantify this into just how hard that task is, I like to think about how difficult the data problem's gotten over the past few decades. So if you were starting out as a portfolio manager, say back in 2000 or 2001, you maybe had something like 60 data sets that you really looked at or you really cared about. You maybe looked at things like technical analysis, or maybe you looked at things in the balance sheet information. Or maybe you were looking at parts of the supply chain that you were getting from sell-side analysts or things like that. Fast forward to today, and Boosted AI is bringing in data from over 150,000 sources, and we're prospectively analyzing tens of millions of data points within a day. And this data can be pretty broad. This can be anything from earnings analysis. This can be news. This could be trade publications. This could hypothetically be credit card data. This could be information you're getting from what's called a 10K or 10Q, which are like these deep financial documents. This could be information you're getting from English, French, Italian, German, Spanish, Mandarin, Japanese, and other news sources. This could be international data. This could be local news. This could even, if you're looking at something in say the fashion section, a Vogue magazine article talking about fashion trends could also be a useful piece of information. Trying to go through and analyze that amount of data and that amount of information is physically impossible for a human to do. But I think where it can get really interesting is the machine can analyze all that data. The machine can kind of summarize what its findings are from that data. It can then surface those results, those hypotheses, to a professional human. And then at that point, the human can work with the machine to basically go through, see if they agree with the analysis, conduct their own research, sort of double check the results. And by combining those two things, you can get a very powerful product. You can get something where you have found, hopefully, all the major opportunities in the space, combined with the human's sort of judgment and capabilities of sort of verifying the types of opportunities that are coming out. And so with that said, what I'd really love to do is actually peel back the veil a little bit and show a little bit how this technology actually works. And we're going to focus on how this works in the generative AI sector, and we're going to focus a little bit on how the machine is sort of analyzing and trying to find the kinds of opportunities, the sets of information it's able to find, how it gets surfaced back to the human. And then I'll turn it back to Evolve to talk about how they actually take all that really rich information and package it into a product. All that said, the sort of first thing that it's going to do is actually educate itself on an issue. So here we've come in, we've asked the machine to go out, we've asked Boosted to go out and basically conduct research on generative AI. And the very first thing that it's going to do is go back in time, as far as it can go, and just educate itself on the issue and educate itself on every major thing that has happened. And you can see that it's got, potentially tens of data points with, respectively hundreds or dozens of different articles per those key events per day. Let's just zoom out and just focus on the major developments. And so if you look at this thing, it kind of goes back in time, and it sort of thinks that, generative AI really took off as having an impact on the market, starting with Microsoft's multi-billion-dollar investment in OpenAI. And then, shortly afterwards, it accelerates with Google Bard's launch as a ChatGPT rival. Fast forward a little bit, further accelerates when you see Amazon's multi-billion-dollar investment in Anthropic. Further accelerates or see some development when you see the nation state cyber attack utilizing generative AI. And then you can see that it's concerned about the possibilities of the OpenAI copyright dispute with news publishers and Musk's legal battle against OpenAI. And I think kind of an important thing to to showcase here is that it's not just going through reading these things and then, giving its conclusions to the human. It's actually going to sort of cite, here's everything happening that's leading to this conclusion. Here's all the articles I've read. Here's all the specific pieces of information that I got that led to my conclusion that, hey, this is something that's going to have a major impact on generative AI. And the other analysis it's doing, as it's analyzing through this monstrous amount of data, is it's also basically trying to understand, okay, based on everything that I'm reading, is this something that's more likely going to cause an acceleration of generative AI? Or is this something that could see a slowdown in the adoption of generative AI? And you see right now, it's pretty confident that this is going to see an acceleration. You can see things like the Intel, NVIDIA AI hardware rivalry. There's more people trying to enter the space. You can see a whole bunch of stuff related to advancements in AI capabilities. You can see stuff popping out around, Llama 3 coming out and some other major launches in the space. And so just kind of generally speaking, I think there's a very high probability chance that you're going to continue to see rising adoption of generative AI, primarily because there's recent really advanced, detailed advancements, applications of generative AI, significant investment in talent and hardware, and in general, people seem to be moving in a positive direction. But it is aware that there are some problems. And so, in particular, there's a whole bunch of allegations around misusing content. There's some controversies around Sora, this new video generation technology that OpenAI is trying to roll out. And there's some concerns around voice cloning and things like that. And so overall, I think it's very, very positive, but it's aware of some of the challenges in the space. And it's going to take both of these things into account when it's trying to analyze and sort of understand what are the main opportunities and areas of growth to focus on if we're going to go out and try to invest in this sector and invest specifically in generative AI. The sort of next step is, after it's gone through, educated itself on the issue, learned everything it can by analyzing millions of documents, understanding where it thinks, what sort of part of the business cycle we are on a go-forward basis, and where it thinks we're going to go over the next year. The next thing it's going to basically do is try to understand, okay, what are some of the stock level impacts of that? So in a world where we see rising adoption of generative AI, we're going to see a boost in development of generative AI technologies. We're going to see increased efficiency and innovation in product and service delivery. We're going to see a decline in some of the older alternative AI technologies. We'll probably continue to see growth of AI in education and training services. There's going to be operational stability for some companies. There will probably be some knock-on general gains in tech investments. And interestingly enough, the machine thinks there may be a decline in companies resistant to AI adoption. And then for each of these things, it's going to kind of cite some very specific examples of this particular development. So just for, a boost in development of generative AI technology, it's going to talk about Meta's driven AI ad revenue surge, rapid expansion of ChatGPT adoption, AI-driven revenue growth, and some of the main after effects. And then from there, it's going to basically be able to say, okay, for this particular impact, after having searched through, potentially thousands of companies or even tens of thousands of companies, is then going to say, all right, what are the kind of companies out there that'll benefit from a boost in development of generative AI technologies, or that'll benefit from increased efficiency and innovation in product and service delivery? And then across each of these things, it'll try to find examples of companies that it think will be in a good spot. And so you'll absolutely see companies like like Intel, NVIDIA, or AMD. But you may also see a company that is maybe a little bit less known, but it's kind of central for different parts of the supply chain. So in this particular case, it thinks that this particular stock, ON Semiconductor Corporation, is set to benefit from generative AI. And why? They provide intelligent sensing and power solutions, analog, discrete module, and integrated semiconductor products that perform multiple application functions, including power switching, conversion, signal conditioning, circuit protection, etc. And so basically, this is a company it thinks is critical or important for parts of the semiconductor pipeline, And as you continue to see increased adoption of generative AI space, this is an example of a company that may benefit. You could see companies in here that are providing critical data for training large language models. You could see companies that produce key components for robotics and image recognition. You could see companies in here that are well designed to deal with security concerns that come from generative AI-driven attacks. You could see companies in here like HubSpot that are not traditionally seen as a generative AI company, but where the adoption of generative AI could see massive increases in efficiency in their product and could scale them up. You could see a company like EA where if they start to use generative AI to replace voice actors, that could see a huge cost factor change and could really positively affect them. And so by basically having the machine analyze this tremendously massive amount of information, it can go out, find these really interesting opportunities and examples of companies that could benefit from generative AI. I can then surface all those opportunities with a very specific detailed thesis on why those companies will benefit, and examples of what the benefits are, and examples of specific articles and documents that lead to that conclusion. And then at that point, we can basically hand this over to the Evolve team, and they're able to build what I think is a really cool and unique product. So I'm going to pass it over to you. 1 second here. Perfect.
Awesome. Okay, thanks so much, Josh. I really appreciate it. I always love every time you give one of those demos. It's amazing what your platform can do. So now a little bit about ARTI, which is the ticker for our artificial intelligence fund. The way that the investment process works is basically that we receive an index from Boosted, powered by the technology that was just demoed, and their system will basically rank all the equities based on an applicability to AI theme. It will give it a 0 to 1 ranking, and then there are some kind of stipulations that we put out in the indexes as well. Like each company has to have at least $1 billion in market cap. The minimum applicability score is 0.5. Some things like that. But regardless, we receive the index on a quarterly basis, and Evolve's portfolio management team reviews the results. So what I mean when I say that is we will basically get a list of all of the companies that Boosted's platform has determined will benefit from the increased adoption in AI, along with the reason for why it's included, kind of like what Josh just walked through. We will do a little bit of like a human smell test sanity check on the reason. And if we think it's a pretty legitimate reason, then that security will kind of pass our test and will be included in the portfolio. Ultimately, the weights are determined based on a combination of market cap and the theme applicability. So if a company like NVIDIA that has a very large market cap and also has a very high theme applicability, it will have a large weight in the portfolio. But a smaller company like maybe C3AI as an example, that has a very high theme applicability but a lower market cap, still won't have as big of a weight as NVIDIA, but it will have a relatively larger weight than it would if we hadn't applied this kind of applicability theme scoring to it. The fund will also rebalance quarterly. So it really does look and smell like an index, just with an active portfolio management oversight on each rebalance. If you go to the next slide, I kind of just wanted to outline the 3 key reasons why you'd consider investing in ARTI. The first one has to do with the growth potential of investing in AI. Josh really outlined a lot of the stats and the macroeconomic impact and just how big this theme could be. Like one example, I was reading a PwC report that said AI could contribute $15.7 trillion to the global economy by 2030. Regardless of exactly what the number ends up being, the point is that this theme is going to impact the entire economy, tons of industries, and we're still in the early innings of it. Despite the fact that the last year has been good for a lot of the big tech or quote unquote AI companies, we are still early in the investment theme. We have not missed out on it. So that's the first reason to consider investing in ARTI. The second reason is that it's a truly one-of-a-kind product. ARTI is Canada's first AI fund that's actually using generative AI to select the portfolio holdings. We like to call it AI squared. But ultimately, and what Josh did outline is because their platform can search through more sources than any human can, ARTI can find opportunities that are a lot more difficult than your traditional your traditional index provider or even your traditional portfolio manager can find. But since it's an active fund, investors get the experience and security of having a PM team do the oversight on the final portfolio allocation. So we really like to think of it as a best of both worlds. And the final reason I'll touch on is that it's a diversified portfolio. A lot of comments we get from investors and advisors when asked how they're accessing the artificial intelligence theme is, oh, well, I own NVIDIA in my portfolio, or I own Microsoft, so I kind of think I have it covered. And while we do think that a lot of those big tech companies are leaders and will continue to be leaders, you'll find them in our portfolio. Doing that creates an element of single stock risk. But also, it means you don't have exposure to some smaller pure play AI companies that maybe you've never heard of, but have potentially larger long-term growth potential than some of these big tech companies. So those are kind of the three key reasons. Now we'll jump to the next slide. These are the portfolio holdings. So you'll see, yes, there is big tech in the portfolio, but hopefully what you'll also be able to see is that there's a lot of smaller names that maybe you have not heard of. And if you go to the next slide, here, we outlined a couple lesser known stock stories. Josh also kind of did my job for me, where he pointed out a few other holdings and kind of gave the boosted explanation, which is great. But like, these are just three examples that I pulled up. C3AI, if you've been following the AI industry at all, is probably a name you've heard of, but I think it's a good example of a true pure play name that you will get exposure to by holding ARTI. They are a leader in enterprise AI software that they basically design, develop, and deploy AI software to lots of companies across industries. So that's an example of one holding that will be in the portfolio. UiPath is a leader in robotic process automation. So again, leveraging AI in their products and services in the robotics area, which I think is also an area that could see a lot of growth potential, just given the strides we've made with AI in the last couple of years. The final one is a bit of a different example, a healthcare services company, but it basically is an example of a company that's truly integrating AI into their core operations. So for them, that involves care management and healthcare cost control. But by investing heavily in AI and developing this internally, they're hoping to ultimately reduce costs and increase operations. If we jump to the next slide quickly. So I think this is kind of the final slide. So I'll just say now, right before I get into it, if you do have any questions, now would be the time to drop them into the Q&A box. But as I mentioned, the fund's ticker is ARTI. It's offered in an ETF class. The class is Canadian dollar hedged. The management fee is 60 basis points. We did kind of go over this a little bit, but the portfolio is rebalanced quarterly with about 60, currently 58, but approximately around there number of holdings. The last thing I'll mention is in terms of sector allocation, I think a lot of people assume that an artificial intelligence fund might have only technology companies. And while this fund is certainly predominantly technology, you'll notice that there'll be other types of companies, including like Corvell that I gave an example to in the previous slide, that will also be in the portfolio. So with that, I think I will just open it up to some questions. Just see. Okay, first question. Maybe I will leave this one for you, Josh. The question is, who do you think will be the early winners in the AI space? And then maybe looking longer term, who do you think could emerge as winners?
Yeah, so, I think at a high level, I can talk about sectors and I can talk about areas that are going to win. Choosing individual names is really hard. Like taking a jump back, when OpenAI first came out, Microsoft stock rose really fast and Google stock dropped really quickly. There's a lot of people that had sort of bet on Microsoft being a key winner, jump forward, and now, Google's back in the game. You've got groups like Anthropic. Open source models are expanding really quickly. And it's a little bit more murky if Microsoft is going to have to clear win. So, at a high level, we think there's going to continue to be acceleration of this. We think that you're going to continue to see more demand for LMs. And so anyone that's core to the infrastructure, chip makers, people that have core data, parts of the ecosystem that benefit from this, foundry services, things like that. These are all going to benefit. And then, there's just going to be a lot of spaces where you're going to see early adopters that are going to start to see some progress. But even on the early adoption side, it's going to take a little bit of time before you start to see the true applications. These things tend to go adoption, evolution, revolution. And today, a lot of people are in that adoption phase where they're really just trying to build a chatbot for different subdomains. I think over this year, you're going to start to see some of those truly evolutionary and revolutionary use cases, and you'll start to see a bunch of expansion. So, kind of circling back to how the machine thinks about this, I think it's just really interesting because, if you look at like NVIDIA as an example, it's been down something like 10% over the past few weeks because Google has announced launching, or partially because Google started launching their own competing chips. Amazon is launching some of its own chips, and you're starting to see a whole bunch of other kind of players come into the space. But that's where something like ARTI can actually do really well because it's just trying to bet on the space overall. And it's actually done pretty well in that particular time period. Again, looking at a little bit more medium term, I talked about this a little bit earlier, but we see robotics is really big. There's adaptations in marketing that'll be really big. CRM companies actually, I think, are really well poised to benefit. Anyone who's got really powerful data that you can't get publicly that can start doing interesting applications, those are likely poised to benefit. And also, as we start moving to a world where we're doing more image recognition, where we're generating more images, bandwidth constraints are going to start popping up again too. So all kinds of interesting after effects and things like that. Love that question, by the way.
Awesome. Perfect. That was a great one. Thank you. Okay, I have one more question here that I'll go over. Then I do want to be cognizant of time. I think this one's a little bit more for me. Looks like it says, looking at ARTI's portfolio, big tech has a large overweight. How are your weights determined? So yeah, I think that's a question we've been getting most frequently. If you look at the portfolio, as I mentioned, the weights are determined based on market cap and theme applicability. No single issuer can be greater than a 10% weight. So you'll see a lot of the big tech names actually bumping up against that 10% weight. The way that we kind of like to position it and think about it, obviously there's no denying that big tech have been leaders in this space and will continue to be leaders in this space moving forward. So I think having them in the portfolio makes a bunch of sense. But in addition to that, there's like two other ways to think about it. One aspect is the potential for M&A activity. Like a lot of the smaller names in the portfolio, there's the possibility that that we could see big tech actually acquiring some of the smaller ones. We've had this happen in some of our other disruptive technology ETFs, kind of like Cyber as an example, which is a cybersecurity fund. We find that a lot of the bigger ones have acquired some of the actual smaller holdings. So that's one interesting point. But then the other way to, I think about ARTI in terms of a portfolio construction is this really is your growth technology play to a degree. Like since there's a larger overweight to big tech, it will perform kind of in line with what you would expect big tech or kind of the NASDAQ 100 broadly to perform. But it has a bunch of mini call options, if you want to think about that, on these smaller AI companies that have a lot of growth potential given where we think the industry is going. So hopefully that kind of answered questions on big tech. But yeah, ultimately the weights are determined based on kind of market cap and theme applicability. Perfect. So I think with that, I will close off the webinar. And if your question wasn't answered, we will get to it and get back to you. But thank you so much for taking the time. We really appreciate it. And myself and Josh are available for any other questions, whether you have any questions about ARTI or any other Evolve products, or I'm sure Josh would be very happy to talk about the Boosted platform in more detail as well. So with that, I think we'll close off. Thank you so much.
Thanks so much.